Hello traders, you're welcome to this video and you are welcome to the month of November. Happy new month. I hope this month is going to be very profitable for us all. Okay. In this video, we are going to be looking at an exciting technique in trading. It's called the cluster analysis. Okay, so if you've ever felt lost in a sea of market data and wondered how to make better sense of trends, then this video is for you, right? We're going to explore how cluster analysis can elevate your trading strategies, make market trends clearer, and help you make more data-driven decisions. All right, in case of if you have heard of the term before, cluster analysis, but maybe you haven't really been um, enlightened so much about what it means or how to use it, then you might want to stick around till the end of this video as we go into this system. So let's start with the basics. What exactly is cluster analysis? Cluster analysis is a statistical technique that groups similar data points together. Think of it as finding patterns and creating categories within your data. In the context of trading, it's like creating clusters of market data based on similarities in price movements, trade volumes, or other key indicators. Okay, so for instance, if you are trading in Forex, you could use cluster analysis to group currency pairs that behave similarly under certain market conditions. This can provide a powerful visual and analytical way to understand market behavior beyond the usual indicators and patterns. So why is cluster analysis so useful in trading? The markets are complex and trends aren't always obvious, right? So cluster analysis allows us to identify hidden relationships between assets, trading patterns, or market conditions that might not be visible at first glance, right? For example, let's say you want to categorize your trades based on volatility and trend strength. By applying cluster analysis, you can group trades with similar volatility and strength levels together. This helps you understand the conditions under which your strategies are performing well or poorly. Plus, it allows you to develop specific entry and exit signals based on these clusters, so you are more in tune with the market. Now, there are several types of clustering methods, but two of the most commonly used in trading are k-means clustering and hierarchical clustering. Okay, now this might sound like a lot of theory, but we need to understand what we are dealing with, right? So we have the k-means clustering and we have the hierarchical clustering. Now, as for the k-means, this method is great for grouping data points into a preset number of clusters, right? In trading, you might use k-means to categorize price movements into high, medium, and low volatility clusters, right? This allows you to see where the price is settling in terms of volatility levels and adjust your strategy accordingly. On the other hand, the hierarchical clustering, unlike k-means, doesn't need a preset number of clusters. Instead, it builds a hierarchy or tree of clusters. This is ideal for traders who want to analyze broader patterns and then drill down into smaller, more specific groups, right? It's great for long-term trend analysis as it allows you to see the relationships between different market states over time. Okay, now let's talk about real world applications. How can you apply cluster analysis directly to your trading strategy? One common use is market regime classification. Okay, one common use is what we call market regime classification, right? Now, by identifying clusters in historical market data, traders can classify different market conditions such as bullish, bearish, or sideways regimes, right? This way, you can tailor your strategies based on the current market regime instead of applying the same approach across the board. Now, another application is asset correlation analysis. Now, this is a common use of cluster analysis, right? And this is another application called asset correlation analysis. Now, cluster analysis can reveal which assets move together. This is under asset correlation now. It can reveal which assets move together or react similarly to market events. For instance, in Forex trading, you might find that certain currency pairs cluster together under similar conditions. Recognizing these relationships can help you avoid unnecessary risk by identifying which pairs might be redundant or have a higher correlation. Okay, now some key takeaways for you is that cluster analysis can actually feel complex. Yes, I'm not going to that lie about that and all these theory that we are talking about, because you need to understand the concept. If you're a type of trader that likes to use cluster analysis, or if you're completely new to cluster analysis, then you want to really understand what this concept is about, right? Because if you have a better understanding of what you're doing, chances are that you might be more effective in that thing, right? So that is the reason why it's important for us to look into the details of what we are talking about. Okay, so cluster analysis can actually feel complex, but it doesn't have to be, right? You can start by experimenting with simple clustering methods using free or accessible tools like Python, R, or even some trading platforms with clustering functionalities. Okay, remember, cluster analysis is most powerful when you pair it with a solid understanding of market fundamentals and technical analysis. Use it as a complement to your trading tools, not as a standalone solution, right? You'll be able to spot trends and group patterns that other traders might miss, giving you a unique edge. Okay, so basically that is it for understanding what cluster analysis is about. If you found this breakdown of cluster analysis helpful, make sure to hit that like button to support the channel, and don't forget to subscribe for more in-depth trading insights, tutorials, and strategies. Also, drop a comment if you have questions about cluster analysis or any other trading topic you'd like us to cover in future videos. Okay, happy trading and see you in the next video. Thanks for watching. Remember, trading is a journey, and techniques like cluster analysis are tools that can help you along the way. Okay, keep learning, keep experimenting, and we'll see you in the next video.